All right. Welcome back to the Banking Bros podcast, where we're all about code cracking cash flow and helping families move from financial confusion to financial control. Stocks, crypto, real estate, side hustles, get rich quick TikToks. But here at the Cash Compound, we teach something different. Before you grow the tree on this episode, we're going to protect the roots. Because wealth isn't about built and getting staged up with hype. It's built in stages of structure, security, savings, strategy, and significance. That's the financial freedom journey around here. And today we're talking about stage one, security. Because if your home, your car, your business, your liability, and your protection have holes in those plans, one bad accident, one lawsuit, one storm, one mistake can wipe out years of financial progress. And that's why I've invited someone who understands this world better than most to partner with us. She helps families protect what they've built so they can actually go build more. My friend and soon to be yours, a Cash Compound partner, coming to us in this episode. Here's the Banking Bros podcast.
Base premium. The term base premium typically refers to the initial standard or fundamental premium amount that an individual or entity is required to pay for a basic level of insurance coverage. This premium forms the foundation of the total premium cost for an insurance policy and covers the basic level of protection provided by the policy.
Kathy Lejour, so happy to have you here. And before we talk about infinite banking and wealth building, we've got to make sure the house is protected and there is security. So stage one of the save and spend system, out of the 4 stages getting us toward financial freedom, is making sure we don't mess up what we already probably have in liability. So thank you so much for being here. Why is this type of thing step one in building your warehouse of wealth? Why is this step one and it's not saving and it's not investing? What would you say?
Well, because you don't build wealth on top of instability. You build it on protected foundation, correct?
I would agree with that, but I'm just making sure I'm on the right track. You know, you're the expert. So that's very much true, I believe.
Well, before you can, effectively implement a save and spend system or, infinite banking of whatever strategy, you want to make sure that your building cannot be wiped out overnight. So you're building a foundation. So think of it like this. Insurance is the foundation. Wealth building strategies are the structure. So you wouldn't build a home without a foundation, correct?
Right. That's, of course. You got to build deep, right? Before you go tall, you build deep.
Exactly. So invest heavily without protecting your downside. Start storing wealth without protecting against loss. So without proper insurance, your financial plan has structural risk. So the purpose of insurance is simple. It's just to transfer the risk off of you, right? Because without it, one lawsuit, one major accident, one uncovered loss can wipe everything out. And there's your savings and your investing. So having the stage one, starting there, making sure you're adequately covered, have enough protection to offset that is key. That's the key to success of building a strategy such as IPC.
I love that. Okay, so how did you get started in this game yourself? I know that you and I met over TikTok, right? We were doing content on TikTok and trying to be viral and shaking and baking and whatever we had to do to get some attention out there. And you found us, but infinite banking came second for you, but you were already in the property and casualty type of game, helping people with lots of different types of insurance. So take us back and tell us about you.
So how I got into IBC or how I got into the insurance industry?
Oh, insurance first, I guess.
Well, I started out, I had a life insurance appointment with my agent at the time to talk about, financial planning, life insurance planning. I had a son at the time. He was 2. So that was 20 plus something years ago. I'm not going to tell you how.
Okay. I got you. Looking good out there no matter what.
Well, thank you. But I went in there because I was trying to decrease my coverages or try to make it make sense because, I was a single mom and just trying to figure it out. So I went in there with the intention of saying, hey, I need to cut costs here. But after, she helped me understand the importance of insurance and to make sure my son was taken care of, in as he grew, as he was growing to become a young man. She said, you want to make sure, you build in financial wealth. And at the time, that was the first time that my family, unfortunately, I wasn't raised where my mother and my parents would, life insurance was important. They may had a final expense policy written, but nothing where you building generational wealth and things like that. So once she got done with me, about 45 minutes later, it was something inside me, that said, I want to teach people this, right? And so she asked me if I was interested in selling insurance. It was funny because it's like, no, I don't, but I definitely want to tell people more about financial or, how to protect their family in the future and build generational wealth. So speed up time, I ended up becoming an agent for her. It was a captive insurance agent at the time. And I knocked it out of the park. And then I felt a sense of, like, I'm really helping people here, right?
Right.
And it was it was a sense of gratitude of and at the time, I didn't think of it like, oh, all this money I'm making. I was looking at it like everybody was telling the next person about Kathy and how she helped him or her to build this financial plan. So years, and I became more involved in the property and casualty side of it. Okay. But the company I worked for, they were heavy on life insurance. So I sold a life insurance product pretty much on every home and auto I sold. It was just an easy sale. Okay. But one of my insureds passed away. And this is what I said, I have to do this for the rest of my life. But one of my insureds passed away, and she was getting ready to retire from a plan. It was a car plan. I think it was GMC or something like that. But anyway, she was relatively young. She took a buyout. And so when she came for her annual reviews, because I believed in annual reviews. Okay. Oh, yeah. My agent gave me that. And so that was a foundation for me. So I thought that was very important. So when she came in for her annual review, she said, I'm retiring. I'm taking the buyout. I'm not moving to Michigan or whatever. And so I said, well, now you need to get life insurance. She said, no, they're going to include that in my buyout plan. I'm like, are you sure? That's typical. That's not typical, but okay. She said, let's look at it next year. We'll reevaluate it next year. 7 months later, her son called me, say, hey, Miss Kathy, did my mother have life insurance with you? And I'm like, no, she didn't. We were going to talk about it at next review. He said, well, she passed away 2 days ago. And our pastor reached out to her previous employer and didn't have life insurance. I'm like, oh my. And, I'm thinking, oh, I got to help him. He was, of course. He was just embarking college. Yeah. Wow. And so I'm like, I drummed up enough money to try to help them bury his mom. And then when I went to deliver him the check that I kind of, bummed,
yeah, I got you. Right. Yeah. GoFundMe, fish fry, sell a plate. Yeah, you know what I'm saying? I got you.
That type of thing, right?
Yeah.
And they didn't have GoFundMe back then, but it's the same concept.
Yeah.
And so he said, Miss Kathy, thank you for doing this, but can you apply that, for a life insurance policy for me? Because I wouldn't want to leave anyone the way my mom left me.
Wow. Yeah.
And that stung, right?
Yeah.
I'm thinking, wow. This 22-year-old young man realizes leaving someone in distress is more than he couldn't mourn. He was so bitter and upset with his mom for leaving him like that.
Yikes.
So from that point forward, I talk about life insurance to everybody.
Wonderful. So I see why when we connected here at the Cash Compound and you saw the Banking Bros channel, why it made sense to partner with us. But let's make sure that we focus on these other insurances in stage one. Help us understand, what are some of the specialties that you have and what are the security foundational products and liability and property and casualty? Give us the specifics, like which insurances do people need before they try to go invest and get heavy in big returns? What does property and casualty even mean? What's property? What's casualty?
Well, property and casualty is home and auto pretty much,
Okay.
right?
Okay.
And the purpose of insurance is to get you back whole. That's the whole purpose of insurance. So insurance should align with your current lifestyle and risk exposure.
Okay.
So if you have a home, and a lot of people think that replacement cost is the market value of their home. It's not the market value.
Okay.
It's how much it will cost the insurance company to rebuild your home as it is today.
Okay.
That's construction costs, that's labor costs, and that, as you know, fluctuates all the time. I mean, so a lot of people fail to stay on top of this, and sometimes it costs them in the long run because they're not, they're thinking, oh, I have enough insurance, or I'm overprotected. It's like, what does all that mean? So I love to get in front of everybody and letting them know, okay, let's break down your homeowner policy. Let's break this down. How much, the square feet? Have you had any updates?
Right.
All of that is factored into a homeowner's policy. And a lot of people don't know that. Building a screened in porch, that, increases the value of the home. A lot of people don't know that. Having a pool, do you have a fence? So there's a lot of checkpoints that people fail to go over because they choose to go online or choose to have someone that, is just so busy that they lose sight of what is important, and that's making sure that their insured is adequately covered. So it goes down the line, making sure you have adequate protection on your home, your auto, and then there's umbrella, and that umbrella is what it is. It covers everything else. So if you've exhausted all of your liability risk on your home and your auto, that umbrella extends the liability on those things. So I tell people, they was like, oh, I don't have very much. Well, you have enough. What have you built, right? What have you built? An asset. So if you passed away today, what would you leave your loved ones? So some people would be like, oh, I don't have it. It's not worth it. You don't think, especially if you have, someone that's going to be responsible for your burial.
Yeah, of course.
Yeah. And so you want to make sure that you just have adequate protection, because again, insurance should align with your current lifestyle and your risk exposure.
So what would you say to folks about deductibles? Sometimes the premium cost on some of these policies and the deductibles, what you have to cover before the insurance kicks in, makes people a little bit confused. What does it cover? When does it kick in? And how do we mitigate that risk? Do we call up our agent or call you up annually to make sure that that's aligned? But help us understand premium costs compared to coverage and deductibles.
Well, your premium cost is what the insurance factor. So there are a lot of factors in premium cost. Where you live, claim activity, your insurance score. So the premium is based off of that, right? All of those factors. And I could go on and on about how many factors are going into a premium, the cost of your insurance. And then there's deductible. The deductible is the amount minus what the insurance company will pay for any covered loss. So let's say you had a loss and it was $5,000. And the insurance company say, okay, it's going to cost $5,000 to repair or replace this, whatever was damaged. And you have $1,000 deductible. So the insurance company will cut you a check for $4,000, leaving you responsible. And it's just, I tell people, it's skin in the game, right?
Okay.
So your deductible, if you want to keep it simple, it's skin in the game. So you would have to pay the $1,000 to make it right. So then there's your $5,000 covered minus the deductible.
Okay. So yeah, help us understand what we need to look at. Most of us out there are not starting from day one. Most of our listeners out there, somebody listening to us right now is not 18. They're not 21. They already have a family. They already have a car. They've got some liability out there. They've got some appliances. They've got all sorts of things going on. What do we do today? When we first listen to this here in 2026 as we're talking to you, like what should we ask our current agent? What should we look for? Should we keep the paperwork or should we just toss it after they send it? Like what do we, give us something we can do today to take action, to remind ourselves like, hey, you really need to know X, Y, and Z before you leave the house in the morning because you're putting yourself at risk.
It's funny you say that because that's what people do. They put thick stack of 100 and something odd pages of your policy to the side and never look at it, right? And then when they have a loss, they're like, "Oh, I thought I was fully covered." But this is what I always tell people when I, speak in front of people. I said, if I'm not your agent, you need to be asking your agent. If I had a worst case scenario tomorrow, and I had to file a claim, where am I underinsured? Where am I underinsured? If I had the worst case where I would, flip someone's car over and there's so many fatalities. I mean, the worst case scenario, they're true, they can happen. And so if that would happen to me, where am I underinsured? So that would be the advice I would give one.
Where am I underinsured? We appreciate that. Now, Kathy, we've partnered with you here at Integrated Insurance Group as a part of the Cash Compound team to help people get started on their save and spend system journey. We're so excited that everyone can get free policy reviews and get a consultation with you by clicking the show notes or the description in the YouTube video or within our community that we have, Financial Foundations, so they can get their house in order as they build wealth. So remind us all where we can find you and how we can find you to make sure that we are covered in case of emergency.
Okay. Well, and that was the key word, free consultation. So that is $0.00, and it's worth, sitting down with me to have an insurance audit. So I will review your insurance. So you would have to have your declaration pages, and go over it, explain the things that you may or may not know. But sometimes it's always good to repeat or hear from another voice what they're trying to say. Sometimes, you may take it a different way. But you can find me. I'm here at Integrated Insurance Group, and that's the name anywhere. So on Facebook, Integrated Insurance Group, or you can go to www.integratedinsurancegRP.com and contact us. If you send me a message, you'll find me, and I'll make sure I'll reply back to you.
Kathy, we'll look forward to that big partnership and helping a lot of families stay secure and save and spend money at the exact same time.
Great. Thank you, Jadu.
We're going to play a game Jonah called Born Into It.
Okay, I'm ready.
This one is looking at pop culture prices from the year we were born. Talking about money management, we got to go back in the day. We're talking toys, tech, and trends, not milk and gas this time. Okay. Pure nostalgia with a money lesson. So let everybody know, what year were we born?
I was born in 1992. We are not.
That is correct. Hold on.
Thank you.
All right.
Thank you. We are not twins.
No, not at all.
You were born in 1984.
That is correct. Okay, so what you're going to have to do is you're going to have to tell me which year that this item, yes,
yeah, I'm ready,
cost this price.
Oh, it got harder. Okay.
What do you mean? What was you already told me. At least you got it right. You knew which year I was born.
I thought you were going to say like G.I. Joe, what year? And I was like, oh, well, that's going to be easier.
Well, we'll change it up some. So sometimes, but at first, I'm going to tell you the item and the price. You tell me the year that item did. I got 10 for you here. Okay, so we're looking for a passing grade. What is that going to be? 7 8
out of 10.
7 out of 10.
7 or 8 out of 10. Here we go.
All right. Okay, $89.
Play along at home. $89.
And the
already.
Event and the
go ahead.
And not the okay. And what we're talking about is the Game Boy.
$89 Game Boys. 84. No. Game Boys came out in 91, 92.
My
Game
boy,
Boys came out.
This one
came
is
out in
such
89, 90, or 91.
I'm giving you a 0 on this one because you said 84, and you know that the day you were born,
Game Boys came out in 89, 90, or 91, something like that.
But you said 84 at first.
Yeah, because I wasn't thinking.
That's why.
Give me the cha-ching. I'm back.
Absolutely not. Because anybody who's heard me tell this story is the day that Jonah was born, Dad gifted his older brothers, there's 2 of us, a Game Boy.
I understand that. I was not thinking. I know that Game Boys came out. I believe it came out in 89. I literally think Game Boys came out in 89. I take back my answer. I'm 1 for 1. Thank you. Let's keep moving.
Okay, this one's a little harder. How much did a Nintendo cost? The entire NES system, Nintendo Entertainment System, cost in 1984, the year I was born. Within $15.
$160.
$199.
Man.
$199.
Okay.
Not so bad though. But
for all those who are paying attention, April 21st, 1989, Game Boys. I knew when it came out. I jumped to conclusions. I knew that answer.
0 for 2.
1 for 2.
Is what I'm saying.
Here we
go. Okay. A CD, an album.
Yep.
Okay. $15. CD album. Michael Jackson comes out with an album, and so remember the time.
92.
That was about 92, 93.
92.
Okay, yes sir. We'll give you that one.
92.
Okay, 1 for 3. A Sony Walkman in 1984. How much did it cost? Within
Sony
$15.
Walkman in 1984 ran you $75.
75 within how much did I say? 15? We have to give it to you. $99.
Okay. I thought maybe 100, which is why I said 75. Yeah. Smart.
Yes. Well done, sir.
Smart.
2 for 4 at this point. Next one. Our 5th question is a movie theater ticket costs $4.15 in which year?
Man, oh man. Okay. They're crazy expensive now. When I was coming up, we didn't really go. The problem is I didn't go when I was coming up, so I don't actually know. When I started going, they were $10. So $4. Were you going to movies in 84 for less than $4? Yes, you were. 92.
That is correct.
Yep.
$4.15 in 1992. Okay, so you've got 3, 4, 5, halfway there. 3 for 5. Okay. In 1984, an Atari 2600 cost what? An Atari in 1984 cost what? Within $15.
$125.
That is correct. On the money.
Oh yeah. Okay.
On the money.
Sounds good. I was about to say if we were $199 for a Nintendo in 92, then we had Yep,
okay. That's good. 4 for 6 at this point. Okay. You're going to buy a Sega Genesis for $149 in what year?
Sega.
Yeah.
Sega probably. So Sega Sonic, was that out? No, not of Nintendo. 92.
That is correct, sir. That's easy for me. See, I remember all these, okay? So that's another one. How many is that? 5? 5 for 7.
6 really, but it's fine.
It is 5. Okay. A new release VHS tape cost you $20 in which year?
This is interesting. Disney used to open the vault. Remember that? It was the only time you could buy Cinderella.
Right. That they did that until Disney Plus came out. You were waiting around for years.
This is the only time we can get Lion King.
So a VHS is going to cost you $20. Andrew Jackson.
$20 VHS. Got to be 92. Really?
1984.
That is
1984.
Expensive.
That is 5 for 8.
That
5
is
for
expensive.
Okay.
And 84.
How much was your monthly cable TV bill?
Let's go back for a moment. You realize you can go to the movie for $4, but you can purchase forever for $20.
That's correct.
Way more.
That is correct.
Okay, go ahead.
Oh, yeah, for sure. All right, cable TV, your monthly subscription in 1992 was what?
Monthly subscription for cable in 1992. Not satellite dish.
Nope.
Satellite, you had a lot of channels. Cable.
Not a game. We talking about practice, just cable.
I don't know the answer to this at all. I'm having trouble.
The year you were born, what was the subscription to probably get something like 25 to 30 channels? That would have been your subscription back then. Cable. You got a Nickelodeon.
$19.99. $20.
It is, if it's within 15, I got to give it to you again. $30 for your cable TV subscription.
But then I thought $30 might have been a lot.
All right. You've got 6 for 9. To pass this quiz, born into it, you got to get this one right.
All right, I'm ready.
In 1984, an arcade game per play was going to be what? You obviously cannot be within $15. This is an arcade game.
Yes, I understand. So I am trying to figure out if I am going to answer a quarter or 50 cents. That's what I'm trying to figure out. I think because of 84, I'm just going to go with the quarter.
That is correct. 7 out of 10 for Born Into It on this episode. 1992, 1984. Congratulations, Jonah. We're playing pinball. We're playing something like that for sure. For a quarter.
Asteroid.
In 1980. Asteroid. Let's go. We're taking steps up the rung of the ladder, building our financial warehouse one at a time. We've got stage 1 security. We talked about that with Kathy from Integrated Insurance. Moving on to stage 2, where the savings comes in. We got to save ourselves from these crazy taxes, as well as the interest that's leaking out of our hands and palms every single day through all of our financing costs throughout our life, and get the infinite banking concept going. And once we are secure there and we've built ourselves a buffer, we've gotten out of debt, or at least we're managing it really well through our cash values, moving on to having a fully funded emergency fund so we don't go back into debt. Now, stage 3. Then we move on to strategy. In strategy, we've got extra cash flows month to month, and we're able to deploy that capital to give us returns and give us liquidity through investments. So stage 2 must come first. That's where savings comes in. And on our next episode, we move into why stage 2 before stage 3, where everyone gets excited about Dogecoin to the moon and great market returns that are not guaranteed. We'll see you on the next step.
Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.